Welcome back, Alpha Hunters. The markets are closed for the week of September the 8th. So let's go through, see what went on this week. We didn't have a lot of economic or major catalysts that were kind of going on this week, but we did get some pretty good movement on the market for the week. Tuesday, short week this week. We did not trade on Monday. Tuesday, nice little gap down, traded lower, kind of sideways most of the day, but it was a negative day, so we did have a gap down, traded sideways, and we had a nice little drop right there in the last 15 minutes. So we kind of ended at the lows of the day there on Tuesday. Wednesday, nice little another gap down, very important. Apple had a pretty bearish day that day as well. But we got a nice little gap down, traded lower for most of the first half of the day, and then second half of the day, a nice little rally ending off the session lows. Thursday, another gap down. This one actually got bought up initially and kind of just hung out there for about the first hour and then very slowly kind of chopped back up. It did kind of towards the highs of the day, not at the session highs, but kind of towards the highs of the day. Friday, flat open for once and then pushed higher for the first hour. And then for the next several hours, we kind of just traded lower until about that 30 minutes right before close as we come down just an hour before the market closed, made a new low of the day from the open and got a nice little pop right there in the last 30 minutes. All right, sector rotation for the week. Energy markets outperforming this week. Nice little outperformance there. Actually up 1.5% on the week. Utilities also up about a 1% on the week. XLC, XLY, XLP, real estate, financials, healthcare, all kind of outperforming there also. The three underperforming sectors for the week: tech, materials, and industrials. Federal Reserve increased its balance sheet by roughly 2% week over week. So nice little move up there. They haven't really been doing a whole lot over the past couple of months, but a nice little uptick there on the Federal Reserve balance sheet. Now it's kind of interesting because they have mentioned several times over the past few weeks that they still want to continue to reduce the balance sheet, but they're not really doing it. The VIX saw a nice early week, nice gap up there on Tuesday. Made sense as we kind of sold down, had a little bit of a gap down there on Tuesday on the market, but nothing as really that would make you think that it was as severe as what the VIX kind of gapped up doing there on Tuesday. Continued to push higher into early Thursday and then started to pull back as we go into the close on Friday. What was kind of interesting is as we were rallying on the markets Thursday and Friday, well, the VIX fell off pretty hard, so we'll see what happens. We'll talk about that a little bit later. The dollar, the DXY, pushed very strongly early in the week. Very nice bullish move there on Tuesday. Continuation Wednesday and Thursday. Look at that lower wick hammer that came in on Friday. That looks ready to explode higher. Possibly. And next major resistance level is going to be up here around the 105, 106 level, or 105.50 to 106 level. So yeah, definitely going to come into a pretty good resistance level, but the dollar's just not stopping. And if it keeps just pushing higher, I don't know what the market's going to do. I mean, the market's not really rolling over, so something's going to break here. Gold pushed lower to start the week, made sense. Dollar was pushing higher, kind of sideways here for the past couple of days. Now, gold's not dropping off nearly as much here over the past few weeks, past month or so, as much as, you know, the dollar's kind of been pushing higher. So gold maybe not as bearish going forward. That's about the best thing I can say. I know it's kind of skeptical sounding, but I don't know. Something just doesn't feel right about being bearish on gold or maybe even just precious metals right now, as they're not really being as bearish as strong as the dollar has been. 10-year yield also, like the dollar, pushed strong early in the week. Nice little pullback into the moving averages on Friday. Nice little lower wick there. Looking pretty good if it just kind of slowly gets back up to these highs and breaks them and pushes up. You know, we're going to be breaking those October highs and even, you know, that high that we put in back on August 22nd. So if we do that, you know, a lot of people, they're saying, oh, it's not going to be a big deal if the, you know, yields keep pushing higher, but yet nobody's taking it seriously because they say, yeah, it's not going to be a big deal. So if yields keep pushing higher, I wonder just how high they will go before people take it seriously. Here's the week over week options change, and you can see nothing really too crazy. We had some put selling going on for this next Friday, September 15th, but I'd say probably the big one is look at all the call selling that was coming in on October 20th. That is quite a bit. There was also a lot of put buying also for October 20th. There was a lot of put buying for September 22nd as well. So yeah, a lot of call selling going on out there in October. All right, so let's just run through these major indices real quick. Equal weight S&P 500, the RSP, nice drop this week. Definitely got none of that bounce later in the week like the SPY and the Qs did. I'll be pretty honest, RSP does not look good. RSP is not looking good. It didn't have nearly the rally that the Qs and the SPY had a couple weeks back, and then kind of got sold off pretty good to start this week. DIA is kind of in the same boat, but it definitely needs to get through this 340 level for it to probably be in the danger zone, in my opinion. As you can see, had the line here for a reason before, came down to it, bounced off of it. So if it gets through that 340 level, we'd have some issues on the DIA. But it's not looking like it's a whole lot of strength out there on the DIA. Just I wouldn't be bearish on it until it broke 340. IWM, this is also looking like the RSP. Nice, solid breakdown to start the week. Very solid breakdowns. Coming back down to the lows that we're putting in back in the middle of August, or at least getting back down into those levels. Yeah, doesn't look good. Just doesn't look good. So if we come out this next week and just kind of goes sideways, I mean, we can very easily just continue to push down, especially if these daily moving averages continue to come in and push down as well. The Qs, the triple Qs, okay. So the Q's throwing in a nasty upper wick today on Friday. So we had a pretty good breakdown to start the week. Q's actually were trying to hold up pretty good on Tuesday, but Wednesday and Thursday, they got hit pretty good because Apple got hit pretty good on both of those days. So yeah, Q's, I don't know, something just not smelling right there. You definitely want to see this pullback, and you want to see it just to slowly continue higher. So early next week is going to be really important, I think. If it doesn't get going bullish, the Qs, which has been holding the market up, that big tech, it's just going to be really tough for the market, as not a lot of other things are looking like leadership sectors or areas in the market. And if tech's starting to falter here, yeah, we'll see what happens. All right, taking a look at that SPY. I'm going to show you the weekly and monthly charts, but the daily chart looks bearish. The daily chart is starting to look bearish, right? Looks like a lot of the other major indices, we got the sell down to start the week. Nice gap down on Thursday. This is a big deal because it gapped below that huge lower wick there on Wednesday. And I really kind of thought if we got back below really the 444 level, the selling could be in. But we gapped down to that level. It's basically right on top of the 50 EMA. We want to bounce in on Friday up to the 10 and 20. We didn't hold over it. And, you can see the SPY also there. Nice upper wick. So early this next week, going to be a big time deal. And don't forget, this next week, we are going to get CPI data Wednesday morning. So maybe the market doesn't really do a whole lot until we get to CPI. I don't know how that'll go, but yeah, I mean, it could very much wait until Wednesday to kind of make a move, but it's not really looking great there on the daily. But on the weekly it is looking pretty good. Last week, we had a nice, strong, bullish move higher. This week, we had a nice little retest into that 10 weekly EMA coming up. So it looks okay for now, but we get another week down. That could be problematic, and I'm going to show you this is another reason why. I've showed this before, all the green kind of scenarios. These are all the possibilities from bear market lows that are kind of overlaid to the low that we had back in October. So all the green patterns, that is kind of the path that we've been on, and all the red patterns are bear market patterns from all-time highs that are overlaid to the all-time high that we put in back in the beginning of 2022, down. And here's the thing is, we are now getting into a situation, we are starting to break down those bull market patterns. So next couple of weeks are going to start to be really important. If the market doesn't bounce and continue to rally, we are going to be in no man's land. If we should have been in the bear market patterns all along, we do have a lot of catch up to do into that bear market type of pattern zone. That's about the main thing I'm watching for, and we'll see what happens. But yeah, if we start to lag behind here over the next week, or we start to drop off, it's not much that's going to be able to happen. We're just going to correct, and that'll be what it is. So it is football season. Enjoy it, Alpha Hunters, and take care.